Studio. We've got tech support here on the line. And I want to run you through how to understand your numbers, how to read your profit and loss each month, what you should be looking at that's going to drive more money into your business. So, goodbye tech support. I've got this flying solo. I've got the controls. All right, so let's run through this. What I want to do is I'm going to take you through a profit and loss, a very simple profit and loss that you should be looking at each month, that our members do, that we go through them each month with our coaches to look at what are their ratios, what's out of whack, where do we focus the 80-20 of our energy so that we can make a massive difference in the next 90 days to improve your profitability and put more cash into your bank account. And we've got a 5-step process that I'm going to run you through right now so that you can understand those numbers, make more money, make accurate decisions, and see more money flow into your bank account. So let me share with you what we should be looking at. So we'll go share window. Yes. Yes, tech genius. All right, so we have here a very simple profit and loss. So I'll make this a little bit bigger so you can see it. All right. Put that up to 170. All right, so here we've got a profit and loss set up. So the first thing we want to do, step one, is we want to review the chart of allocations. And we want to make sure that your chart of accounts, or where you're allocating revenue, costs, overheads, is set up correctly. So the first key thing is to make sure is that your revenue is coming in here at the top line, and to make sure that you are allocating it across different projects potentially. We can then line up your cost of goods, your cost of sales, so that you can make accurate decisions, and we can track your number one number, which is gross margin. All right, so if we see here, we've got other revenue and sales. So sales are $1.8 million. The next thing in our chart of allocations, or our chart of accounts with where we're allocating our costs, is we want to make sure that we have labor in cost of sales. And there's 3 key numbers that go into cost of sales. So cost of sales is anything that goes into producing, building another house, doing another job. So the 3 key things that we're going to put in our cost of sales are labor, materials, and subtrades or subcontractors. And then we might be doing work in progress adjustment each month or each quarter to make sure that they're accurate and timely, and that we can get a true accurate gross margin, and we can make good decisions in a timely fashion to improve your bottom line. So then going down here, the next step, we want to make sure, the biggest mistake that we see when people come to us is that they might have their labor as employees down in their operating expenses. And your operating expenses are your overheads, your fixed costs, whatever it takes or costs you each month and each year to run your company, regardless of how many projects that you do. So we want to make sure that your salary is included in expenses. So we're getting the true overhead cost ratio of what it costs to run your business. So we then know, hey, we should be following profit first principles and taking out profit each month and putting that into a separate bank account so we can run the business leanly. We want to make sure that your salary is in expenses. So when we come to hiring a project manager, hiring an estimator, hiring a quantity surveyor, that's actually covered off, it's accounted for, and that we are accounting for that cost and attributing that to what it's costing you to run the business. All right, so next key part is, if we make sure that we've got in here, your salary will be in here, wages and salaries. All right, next key part, once we've got that, waste management and other P&G expenses go into cost of goods as well. Step 2 is we're going to calculate the ratios. So biggest thing is we want to know that our gross profit margin is at least 20% or better. And the reason for that is that gross profit is what's all the money that's left over out of paying for materials, doing a job, subcontractors, and labor that we've got left to pay our overheads, pay our bills, and trickles down to our net profit. And so the ratios that we should be using are 20 to 25% plus gross profit at a minimum, 8 to 12% overhead costs, including your salary, or potentially more like 10 to 15% now with cost increases. And then that gives you a net profit, should be at least 10 to 15% after paying yourself a salary. And that net profit is a ratio of you being paid a decent return for investing capital, taking on the risk of employing people, health and safety, obligations to the tax department, etc. So if we have a look at this, we can see here that we just divide to find the gross profit margin. We divide the gross profit of 470K into our 1.8 million there, and we find that that's at 25%. So we can go tick, cool. That's scalable. If that is 15 to 20%, it's orange, it needs looking at. If it's below 15%, then each month when our coaches look at this, we go, that's red. We need to massively focus on improving your gross margin. So gross margin is the number one indicator of how effective, how efficient your business is and how well it's running. That's the number one thing that drives whether we can scale and grow or not. You have to earn the right to grow. So you have to have the fundamentals in place to make sure that we're running projects efficiently and effectively, to make sure that we're not scaling. There's two things that you can't scale. One is chaos, and two is lack of profits. Because in every business we see, you'll just run faster on the hamster wheel. So that's the first thing that we do is we drill down into your numbers. We focus on, is your business scalable? Are you just going to run faster on the hamster wheel? Or do we need to fix your gross profit margin first? And typically that's looking at the two key aspects to gross profit margin are margin going into a project. So how efficient, how effective is your sales and marketing and your pricing? And then margin coming out. So how good are you at controlling the job, capturing variations, managing the project, labor scheduling, etc. And then profit on the back end from cost controls, negotiating prices, etc. So we now see that, hey, this business is at 25% GP. So front end is looking good. Next step, what are all the overheads that go into running your business? So we have a look down these and we see here actually bank fees is quite high. We have a look and we see here, are salaries, other ratios in or out of range? So if they're in range, it's how do we maintain them? How do we grow from here? How do we improve and systemize for stability? How do we train the team and get a load of work off your plate? So who are we hiring next? Who are we bringing on board? Are we training your foreman how to read plans and do project management? Are we training your project manager how to price jobs and so that he can step in and be a construction manager and do both project management and price the jobs and estimate? So if we have a look down here, we've got 325K total costs. So total costs for this business are 17%. So that's a little bit on the high side. So we want to be having a look at, okay, cool. What would it look like if we would land 2 more jobs under our existing ratios? What would that mean? So if they are 300K, we might add 600 grand to it. And then we can go, okay, cool. That 600 grand takes us to 2.47 mil. And then we just divide our 325K into our 2.47 mil. And we can work out, are we in KPI? Or do we need to add more people to the team or invest in more marketing to grow? And then lastly, so if it's out of range, if our gross margin's out of range, we want to be looking at, is our work in progress up to date? Do we have cash collection problems? So are our subtrains billing as they go? Do we need to get a larger deposit? Do we need to be ordering on the first of the month? Do we need to change the project timelines and look at our cash collection methods? Do we need to be invoicing weekly? What do we need to do differently? So do we have a debtors problem? Is it a margin in or margin out project problem? Is there maybe one project that is lagging behind. So we might have an overall 20% GP, and we might be doing 4 projects. 3 of them might be at 22%, but one of them's at 14. So we then want to drill into the ones at 14 and figure out what do we need to do specifically to improve the productivity, the profitability of that project, and then we can scale. All right. And then we want to be looking at, down the bottom, what is our net margin? And so if we divide our 159K by our 1.8 mil, we can see that the net margin on this project is 8.5%. So we want to improve some efficiency and effectiveness to make this more scalable. So it might be add another job or two, might we look at trimming our overheads, and it seems that our bank fees are quite high. There's probably some credit card surcharges, probably some other things that we could drive efficiency, effectiveness, and improve our marketing so that we have a better net profit margin. All right. So step 5 in our 5-step process is we want to make sure that we are getting our invoices out each week, each fortnight, that we've got our variations signed off so that we're getting billed weekly, good cash flow coming in, no nasty surprises at the end of it. Our labor forecast versus actual, we're on top of that. We're tracking that. We're able to say in the toolbox meetings, hey guys, framing was going to take 100 hours. We're halfway through, but we're not at 50 hours. We're sitting at 65. What do we got to do to pull back 15 hours a week over the next 4 to 6 weeks? Otherwise, no one's getting their bonus. Do we need a bookkeeper to go back and recode our chart of accounts so that we've got accurate allocations? Are you running weekly toolbox meetings, construction meetings, so that we're on top of where projects are at, the milestones? Are we on track with labor, materials, and subtrades? Is your work in progress up to date? We want to be getting an individual profit and loss per job so that we can track which jobs are working well, which jobs do we need to drill deeper in. So get your monthly profit and loss done. Get your bookkeeper to do most of this. You check it off, and then we can help you make accurate decisions. Then we want to be looking at overall comparing your budget to your forecast. So how are you tracking each month versus your goals? So if your goal is to go from 5 to 8 mil this year, are we on track each month, and are the ratios in account? So the ratios are critical analysis. So we want to be looking at those 3 key ratios. So gross profit margin, is that 20 to 25% plus? Next, your overhead margin, so your overhead ratio. And ideally, that'll be in the 10 to 15% rate, depending on how you're growing. And then net margin, net profit margin to you, 10 to 15%. So that's what we use, and then we can decide the strategies. So which one of these ratios is out of whack the most? So is it red, orange, or green? Then we fix that area. We unblock the pipe where it's clogged the most, and we can hit the 80-20 nail on the head. Then we document the actions, the persons, the date. So who's going to do what strategy by when to improve the ratio. So if to improve your gross profit margin, we've got our 151 ways checklist across labor, marketing, sales, systems, pricing, subtrades, etc., that we can focus in and dial in out. What are the specific 3 to 5 strategies that are going to make a massive difference over the next 90 days? And then we book next month financial review in 60 minutes. So what are we going to be reviewing 30 days from now? What's the focus to improve our KPIs, our indicators, and our bottom line of what's dropping into our bank account? So to sum up, 5-step process to make sure that you look at your numbers each month. Number 1, first, we're going to review the allocations. So is your chart of accounts set up correctly? So is labor in cost of goods sold as opposed to being your overheads or your fixed expenses? Is your salary included in expenses? So we have a true operating cost structure to run the business each month, and we know what it's going to cost to hire someone to replace part of the role of what you're doing. And do you have waste management and every other P&G expense in your cost of goods or cost of sales? So that's number 1, review your chart of accounts and where you're putting your allocations. Number 2, review the ratios. So gross profit margin, 20 to 25% plus, overheads, 10 to 15%, and net profit margin, 10 to 15%. Step 3, are the ratios in or out of whack? So are they red, orange, or green? Then that's going to decide what actions, activities, and strategies do we need to improve. So if gross margin's out of whack, we're going to go and work on improving our gross profit margin. And lastly, the process. Do we have the step-by-step process, getting invoices out weekly, variations signed off and billed weekly, labor forecast versus actual on each site, bookkeeper to code to the chart of accounts, weekly toolbox, foreman and construction meetings, work in progress up to date, making sure that our individual job profit and losses are true and accurate, produce a monthly profit and loss, compare it with our budget or our forecast so we can see is it red or is it green. This is what we do with our boardroom members every month. Compare the ratios. That's going to decide the 80-20, what strategy is going to make the massive difference so that we're not overwhelmed. Document the people, the activity, and the outcome. So who's doing what by when, and then book out next month's financial review where we see the impact of what's happened to the bottom line, and we can go, whoa, or we can go, we need to fix that and make some changes. All right, that's it from me today. I hope you find this helpful. I've got a truckload of resources on this. Make sure you are looking at your profit and loss each month. You know what you're looking at. If you can make accurate decisions with confidence based off clarity in your numbers, you're 90% of the way to having a rock star business that gives you true wealth. And true wealth is more money and more time. All right. I hope you got value from today. That's it. Decipher your numbers, unclutter them, make sure they're clear, get control of your business, and I will see you soon. All right. Cheers, team. Bye.